Okay, so today we should have another pretty quick and easy episode of combining the moving average convergence divergence with another one of our indicators. We have done MACD RSI, MACD MFI, and today we're going to do MACD Bollinger Bands. So that's going to be our third combination strategy in total. Let's start a new file to create this. So let's call it MACD bb.ipynb. Same process as always. Split it, take our MACD MFI, paste the whole thing in. Now, instead of our money flow index strategy, we also have to paste our packages in. And all of this code is available for free on the company website. If you are interested in following along, and if you are not, you can just watch to see me paste everything in really quickly. And then let's change this to SPY is going to be the first thing we study. And our overbought and oversold thresholds will still not quite work. We don't need these for Bollinger Bands. Let's go to our Bollinger Bands code and our strategy and Bollinger Bands function. So let's call this add BB strategy. And we need to also copy in the global variables from our Bollinger Bands. So remember, it's the standard deviations of the close prices over our look back window. So we need to find both of those globally. The Bollinger Band's length is going to be 20 by default, and the deviations, I'm just going to lower those right off the rip. It's just going to be one standard deviation, and we're going to be in overbought territory or oversold. And full strategy, MACD strategy plus BB strategy. And then I need to change these column names to BB strategy. And that should be good. Should do everything we want. I need to add add Bollinger Bands, and then add BB strategy. When you run this whole thing, I need to do the plot figure again to make sure these show up on different plots. plt.figure. Run it. Okay, so here's our MACD, same as always. Here are our Bollinger Bands, and here are our strategy returns. So what's going on? Let's take a look at our data frame to find out. What I want to see is when we have a sum of Bollinger Bands being 1 and MACD being 1, that's a buy strategy. So the full strategy is going to be 2. Where the full strategy equals 2, we're going long. So we're not in cash, we are in a long position, and otherwise we're just in cash at 0. So the full strategy values can be -2, -1, 0, 1, or 2. So I'll show you what that looks like in a quick function here. So data frame equals data frame full strategy dot value counts, and it'll tell a little story. So we're going to be in a short position for 130 of these 1,000 days that we've taken a look back window for. And we're going to be in a long position for 121. That means that we're going to be over the one standard deviation of close prices over 20 days at the same time as the MACD giving a bearish signal for 130 days total. And then we're going to be long, meaning that the Bollinger Bands is in oversold territory while the MACD is giving a bearish indicator, a bullish indicator, 121 days out of those 1,000. And at first glance, it doesn't look super bad. Even though our returns were, negative over time, so were the S&P 500. So let's do a different ticker. Let's keep it to 1,000 days. let's take a look at one of the best performing stocks from our outputs this quarter. And if you're watching this, you get a little sneak peek of those for free. Thank you for your attention. Wow, not super bad. So our strategy, again, to me it looks a little bit random. Let's up the look back window. Instead of 500, let's do 1,000. Let's do twice as many days and see if we get outperformance. Nope. You're better off holding Duolingo in this case. And then if we do 10,000, check it again. No good at all. And this is hourly data. We can do daily, minutely. If we want to do minutely, let's take a look. Because some people believe that different intervals yield a different price behavior, but the stochastic nature of share prices is fixed among all time intervals. So you're not going to find something on the minutely data frame that doesn't work on the 5-minutely data frame. You just need to be able to. That's really hard to explain, actually, so I'm not going to even try. But look, we can adjust all factors of this. What if we made it way harder for a Bollinger Band to give a signal? What if we made 2 standard deviations? So we have much less likelihood of reaching an overbought or oversold level. And we're going to test every single hourly data point that we have available through Yahoo Finance. That's our MACD. These are our Bollinger Bands. And there's our strategy down below. So moving average convergence divergence doesn't seem to work in harmony with the relative strength index, the money flow index, or Bollinger Bands. And we've done some really extensive backtests for all of these. Thousands of hours, thousands of days, several tickers. And you can do many, many more yourself. I might have said this in some of my TikTok or short form content videos. I've ran literally hundreds of thousands of tests. These are, again, some of the more simple ones. But as they get more complex, the results don't get more impressive. It just gets more and more obvious that this sort of study is either impossible or something that you're going to need to devote a really, really long time to understanding how to compete in the space. Once you can run these tests where you're doing multiple indicators, multiple tests, several decades of information that you're looking at over many tickers, it becomes really clear that the people who are just sort of playing around with ICT, looking at small patterns and then seeing a pattern that works, sometimes we make some money. They might be in this area here where it's like, wow, it works. And it's working really consistently too. Like that's a lot of trades in a row where you would think you've finally done it. But that's the issue. They don't have the ability to test at this level, and they'll never understand why they are losing money sometimes and making money sometimes. So now you do. So congratulations for sticking around for these episodes. I really appreciate your time. I know these can be kind of boring, but for me, this is super interesting stuff, which is why I do it. If you want to actually compete in the stock market, these are the introductory videos that you're going to need to set up a framework for doing it. Ignore anybody who tells you that this is really easy stuff, and ignore everybody who tells you this is simple. Until next time, stay sharp.